It's important to really have a system in place that's going to allow you to create that intentional profitability. And so if you do not have a system in place that's going to drive profits, right? If it's all about sales, if it's all about value and discounting your prices in order to make a sale, then you will not accomplish your life's goals, right?
Welcome to the Women Choosing Growth podcast, where we bring you practical advice and guidance on how to grow your business and achieve success in your entrepreneurial journey. We feature inspiring stories of success, challenges of growth, and lessons learned from women entrepreneurs, industry experts, and thought leaders who have been through the growing pains inevitable as an entrepreneur. Whether you are just getting started or are looking to scale up your business, our show is designed to provide you with the tools, resources, and community you need to grow your business. Join your host, Tina, a lifelong entrepreneur and business growth advisor, as we explore topics such as marketing, sales, finance, leadership, and personal growth, all tailored specifically to the needs of women entrepreneurs. So if you're ready to grow your business faster and smarter, and learn from the experiences of those who have traveled the growth path before you, then this podcast is for you. Thanks for tuning in, and let's get started.
Welcome to another episode. I am your host, Tina Sue, and this is Women Choosing Growth. I am thrilled to introduce to you today Suzanne Marega, CPA, fractional CFO, host of the Profit Talk podcast, CEO of the Marega Group, and an author. Suzanne has a wealth of experience that she shares with us today. Her expertise has helped numerous clients cross into seven figures, purchase properties for their businesses and farms, and create intentional profitability to engineer long-term success. With topics ranging from how the top 1% maximize their profits, step to recession-proof your business, mindset shifts for achieving thinkable profits, and more is all what we discuss. Suzanne is here to provide us that practical advice on how to focus on profits first. She also has a great book you may want to check out, Profit First for Minority Business Enterprises. And the reason I love this book is because for every dollar from the book sold goes towards a project, Send Girls to School. She shares a little bit more about that project and the book sales at the end of the episode. So stay tuned and follow along. Suzanne, I am so excited to have you on the show today. You are sharing your expertise about one of my favorite topics, which is profitability. So we are going to share some wonderful advice to our listeners to help them be more profitable in a very strategic way. So welcome to the show.
Thank you for having me. I'm excited to be here today.
I am thrilled to have you. But before we dive into all of your great nuggets that you're going to share with our listeners today, I want to hear about your story. How did you become so passionate about profitability, and what was your life like before you wrote this book and you became the leader in this topic that you are?
So, my passion around profitability, it starts from really being an entrepreneur myself. I started my business because I had a passion for doing accounting and taxes. And just like many entrepreneurs, we start our business because we want to make the world a better place, right? And maybe where we've worked before hasn't been able to accomplish that. And so doing our own thing allows us to have that impact in the world that we really, really want. And and what I found, like many entrepreneurs, is that, I love what I did so much that in many ways I ended up doing it exactly for free, right? And and so it really wasn't until I started to align the things that were important to me, what I wanted the outcomes to be, and really have some, I'm going to call come to Jesus moments where you realize that, what we're taught in school doesn't really work,
Mhm.
that really starting to set those intentions, set priorities, and really prioritize profitability, that I really started to accomplish my goals. Because one, when a business is more healthy, right, when a business is profitable, we're able to serve our customers much better because we're able to hire the best and the brightest. We're no longer stretched because we're no longer trying to figure out, how are we gonna get the margins right in order to be able to afford the overhead? And so really just coming into the grips of the reality is a profitable business is a healthy business.
Mhm.
Was I really able to make those changes in my business?
I love what you said there too, because I've heard from clients and just people, other entrepreneurs in general, who are like, "Oh, I don't really I don't focus on profits in my business. I'm really about serving my community or about serving whatever their mission is." But you have brought up such an important part. Like you can serve that mission, the community, the whatever your business does, so much better if you focus on profits. It's not a bad thing. You're not being greedy by thinking, "Oh, I need to make X on the bottom line." You can literally have the mentality, and should, of like, I can just do more then.
Exactly. You can pay your staff a reasonable salary. I mean, I can't tell you how many entrepreneurs I've talked to, and they tell me they're hiring based upon who they can afford versus who's gonna perform best on the job. And what that means is you're not gonna be able to perform your best. You're not gonna be able to put the best person that best represents who you are and who you wanna be if you're hiring based upon who you can afford. And so only by pricing adequately and creating profitability, creating those margins, are you gonna be able to best serve your client.
Absolutely. And I can say that in my early days of being an entrepreneur, that's how I hired, right? I didn't have the fat bottom line, if you will, to hire the people that I wanted to, but there was still strategy in that. So that was still the pursuit, even in the first year or two when I was just getting started. Um, you talk a lot about creating systems, right? And like having a clear plan, because I think a lot of entrepreneurs are like, yeah, I'm profitable, but that's where they stop. And so like how can you make sure that you're as profitable as can be without giving up um, morals and the things that like the business is set around. But I think you're passionate about saying it comes down to systems. Is that fair?
Exactly. I mean, what we focus on is what we accomplish.
It's
And
fair.
I think a lot of times what happens in the business community is we focus on, what's your revenue, right? Are you 7, 8 figures? Are you 9 figures? You're never good enough. It's all about the revenue. And staff size, right? I think there's a lot of pressure. A lot of the large programs out there, are focused on staff size. We've gone through the Goldman Sachs program. One of the criteria of going through the Goldman Sachs program was about revenue, right? And employee size. And it's a great program. However, at the end of the day, you can have a multi-million dollar business and still not be profitable, right? Just because you're adding dollars, right? And if you're running at a loss, your losses, it's not multiplication. It doesn't turn positive just because you keep adding on revenue, right? If your margins aren't adequate, it just means you're compounding the loss. And so it's important to really have a system in place that's going to allow you to create that intentional profitability.
Hmm.
And so if you do not have a system in place that's going to drive profits, right? If it's all about sales, if it's all about value and discounting your prices in order to make a sale, then you will not accomplish your life's goals, right? You will not accomplish being able to save for retirement. You will not be able to accomplish investing in your employees in order to build an ideal team.
Hmm. Or even not like I always say, you're leaving money on the table. So maybe you are hitting some goals. Maybe your lifestyle is fine with the profits that you're bringing in, but you could be it could be double. I've seen that. I've worked with clients who I found things lacking in their business, structure lacking in their business, where their profitability is like, okay, yeah, you're making 250 a year. It's great for your family, but you literally have another 300 sitting here that if we just do these tweaks. So even if you are profitable, even if you are putting money in your retirement, you could be leaving so much more. And maybe that's where, you know, uh, giving to charitable donations comes in. If you don't need any more in your lifestyle, like let's focus on how much you can do within, reality.
Exactly. We can always do more, right? We can always do more.
Can always do more.
And exactly. And so one of the first things when I'm working with entrepreneurs or when I've seen entrepreneurs that have achieved extreme profitability, it's been through a cash management system that's called Profit First.
Hmm.
And Profit First is a cash management system that was invented by author Mike McCallum. And it's a system that does exactly that. It allows a business owner to really make profit, right? It creates intentional profitability, and it creates intentional profitability on day one. And I like it because it works with your natural human tendencies,
Hmm.
which I think is really important for your success, right? If we make it too hard for ourselves, right, it becomes hard to implement, and it becomes almost like something that we're going to forget, we're going to drop, right?
Yeah, for sure.
And so what I like about Profit First is a system that works with our natural human tendencies. And what happens in Profit First is there's something called Parkinson's law. And for you guys that are listening out there that may not have heard about Parkinson's law, what happens in Parkinson's law is we're told that we're efficient as human beings. So if you're giving me 2 weeks to finish a project, it's going to get done at midnight the night before it's due, right? It's going to take 2 weeks. But if you give me 1 day to finish that project, I'm going to finish it in 1 day. And so what that means is I'm efficiently using the resources that I've been given. So what we see in business, for example, when money is flowing, when cash is plenty, I know everybody tells me COVID was hard, but I've seen a lot of businesses have their best year ever during
Oh, for
COVID.
sure. Yes.
And when they're getting PPP loans and they're getting EIDL loans and there's all this extra money that's out there, right? Then suddenly people are starting to spend more money, right?
Hmm.
Now, when the opposite's happening, when cash is not flowing, when money's tight, my entrepreneurs are asking me different questions. They're asking me questions like, which team members can I cut right now so that I can make it through this? How do I cut these team members? Or what expenses can I cut? And the reality is the only difference is that the cash availability is different.
Hmm.
And so what happens in Profit First is that we're going to create an illusion of scarcity. And we're going to create that illusion of scarcity through the use of bank accounts. It's sort of like Dave Ramsey's envelope system
Hmm.
that's out
I
there. You
used it
guys
with
may
my
have heard
kid.
of. Okay, so you've heard about it. And
Yep.
what happens in Dave Ramsey's system is as soon as you get your paycheck, money's allocated into envelopes according
Hmm.
to different purposes. You might have an envelope for groceries, you might have an envelope for your rent or mortgage in some cases, you might have an envelope for dining out, but you have an envelope for every purpose of your life. And that's the same way that Profit First is going to work instead of having envelopes, because we don't want anybody having an envelope, especially you guys out there that are 7, 8-figure businesses, right? That would be dangerous.
Yeah. We're not talking cash,
Well,
cash in an envelope.
exactly. Please don't have envelopes. What
Yeah.
we're going to do is we're going to have bank accounts.
Hmm.
And we're going to have a bank account for every purpose of our lives. So we're going to have a bank account to collect all of our revenue. We're going to have a bank account for profit, owner's pay, tax, and operating expenses. And what's going to happen in Profit First is all your money is going to go into one bank account throughout the month. So if you've got merchant services, all your deposits are going into this one bank account that's called the income account. And then twice a month, you're allocating to different bank accounts in accordance to your purpose. So one of the first bank accounts that you're going to allocate to is going to be your profit bank account.
Hmm.
And that's exactly what it is. It's your profit. You're literally profitable on day one. So if you've been focused on revenue, you've been discounting your prices and you've been like, okay, why am I not making a profit? Well, you've just changed around your luck because you are profitable on day one. It's physics. You move money from one bank account to another and you don't touch it.
Hmm.
You just made profit.
Yep. Let's pause there. I want to have our listeners think about, are they focusing on putting profit in their bank account or, the illusional pocket from every single sale? Most do not. Most follow the QuickBooks mentality of revenue. I've got my labor, my costs, I've got the other expenses like my rent, and then whatever's left over is what I get to keep. This is flipping that to profit goes up at the top. Profit is first, hence the name.
Exactly. And I can't tell you how many times I've met entrepreneurs and I asked them, what is your profit? And they tell me, I don't know.
I know. Or they give you revenue.
Exactly. They give me revenue or they tell me literally, I don't know. They tell me their accountant's still working on it. They're going to fire their bookkeeper, but they literally don't know their bottom line. And so imagine having a system where you can eyeball a bank account and know what your profit is.
Mhm.
Now, we still don't want to fire the accountant. We still want financial statements. You guys that are getting government contracts that may be out there, or, you had to file taxes. We still need the accountant to prepare those reports. But now we have created a physical method of creating intentional profitability. Now, the next bank account that you're going to fund after you fund your profit account is going to be your owner's pay account. I've seen so many entrepreneurs and I asked them, who's your most valued player? Who's your MVP? Who's that person that if they walked out the door, you would double their salary in a second, right? Because you need them.
Mm-hmm.
And a lot of times they'll tell me it's Johnny, it's Susie, it's Mike, but very rarely will an entrepreneur say it's themselves. But the reality is that business wouldn't exist today if it wasn't for you having started it, right? That you're the thought leader behind that business. You're the passion. When you walk in, your business operates, right? They're like, okay, Tina's in the room. We're going to show up today. I can't think about, I think about Apple, for example. The day that Steve Jobs walked out the door, Apple changed.
Mm-hmm. It did.
And the day that you walk out the door for your business will be different too. And so just like you would never allow Johnny, Susie, or Mike to go without a paycheck, you shouldn't either as a business owner. And so that's why we're going to allocate to a bank account called Owner's Pay, because we want to make sure that you are being paid.
Mm-hmm.
And one of the things I want to bring out is when you're allocating to this Owner's Pay account, people ask me, how much should I allocate? And you're going to be allocating a percentage of your revenue to profit, to owner's pay. And the reason why we're allocating a percentage is because as your revenue increases, so should your owner's pay, and so should your share in the profit. Because as an owner, you deserve to be compensated based upon the performance of your business. And Tina, I can't tell you how many times I've met entrepreneurs, they hit the 6-figure mark in terms of what they pay themselves. And 10 years later, they've doubled their revenue and they're still paying themselves the same salary
Yeah.
that they paid themselves 10 years ago, because
Seen it too.
6
Mm-hmm.
figures felt like a lot of money, right?
Mm-hmm. Yes.
And so you're going to pay yourself based upon the performance of your business, because you're going to be paying yourself a percentage of revenue is what you're going to be doing. Now, the next bank account after you've funded your profit owner's pay account, the next bank account that you're going to fund is going to be your tax bank account. So
It's,
many times,
it's the one most people forget.
absolutely, absolutely. As a CPA, I have seen so many people wonder, how are they going to pay last year's taxes with this year's money? Like literally on April 15th, these owners are like in a state of panic. They're like, can I get an IRS installment plan? I've seen them rob their IRA accounts in order to make a tax payment. By the way, don't do that. You'll pay a 10% penalty on an early distribution from your IRA account. And and the good news is, because you're listening to Tina's podcast today, this will never be your problem again, because from now on, you're going to be allocating to a tax bank account. And and don't worry, most of this money will not actually go to the IRS, because you're going to be meeting with your accountant regularly, hopefully at least quarterly, to discuss tax strategy, estimated taxes, and profit. But you're going to have that money there just in case you need it.
Mm-hmm.
And so the last bank account that you're going to fund after you fund at your profit, owner's pay, and tax account, that last bank account that you're going to fund is going to be your operating expense account, which is the OPEX account. And this is the account that you're going to look at and you're going to, okay, can I afford to upgrade into that new office space? Can I afford to bring on that new support staff and increase my payroll costs? Can I afford to go out and buy this new greatest gadget, right? This new computer.
The new thing.
And exactly. And so now you created this illusion of scarcity, because you're only going to spend in this operating expense account. And instead of all your money being available to spend in one bank account, like it probably is today, you're literally restricting yourself to this operating expense account. And so you're creating this illusion of scarcity is what's going to happen. And you're now working with your natural human tendencies, because now that you've got less to work with, you're going to spend less money. And you've already got your profit reserved. You've already got your owner's pay reserve. You've already got your tax reserved. And so now you just have to be strategic about those operating expenses.
Yes. And I think that's a great place to pause, because I think that's where even very financially knowledgeable entrepreneurs get a chunk of that right, whether they have them in separate accounts, but they're allocating for some of those things. But where I see a majority of entrepreneurs is, again, with that top-down mentality, and then they go hire the new person, and then they go hire or go add the new fancy widget or increase their marketing so that the top line grows. And then you're basically robbing from yourself. You're robbing from potentially the IRS because you don't have the taxes in there. You're robbing from your own paycheck. You're robbing from the profitability that is set there so that you can reinvest into the company strategically. So it's like you're basically saying you have this budget and you have to stay within the budget, but you're already paid. You already have the profit. You already have the taxes. And that's the part that I see most entrepreneurs do backwards.
Exactly. You've engineered your bottom line. You've
Mhm.
created a cash management system now that accomplishes your goals.
Mhm. Yeah. And lets you operate like the part that I love about Profit First is there's no guesswork. It's not like if I go buy this, what's going to happen? What do I have to make in revenue to cover this next expense? There might be some of that, strategic thinking, but it's not where I have to make up the $30,000 in the next 3 months because I took that from one of my other, buckets basically. So you just operate within the OpEx account. What's in there you can spend. Just like if it was an
Exactly.
envelope, right? You literally can take out the cash and go to the store.
Absolutely. Absolutely.
Hey, incredible women entrepreneurs. It's Tina Sue here. I know you're juggling a lot, growing your business, managing family time, and trying to find balance. Deep down, you know you're capable of so much more. But maybe fear or uncertainty is holding you back from achieving that dream business, that dream life that you deserve. That's why I created the Dream Big, Plan Bigger guide, a game changer for your business growth. This isn't just another goal setting document, it's your personal roadmap to achieving the impossible. Imagine having a clear vision of your biggest dreams, breaking through the barriers that hold you back, and reigniting that passion that fuels your journey. This guide is your roadmap to doing just that without compromising your family time or your personal priorities. You deserve to see your business thrive and still have time for what you love. Let's take this journey together. Download your free Dream Big, Plan Bigger workbook now at tina-sue.com and start making those dreams a reality. Now, let's get back to the show. You mentioned, 7 and 8 figure teams. There's more cash. First question I have for you on that is at what point, if it is a percentage of revenue and we've got someone doing several million in revenue and maybe low cost of goods, so their bottom line is, really nice. At what point do you change those percentages from what I'm paying myself to more of the reinvesting into the company? Because, maybe I don't need $700,000 in my profit, and I'd rather have that in my in my take home pay, and I'd rather have that in my profit to reinvest. How do you make those decisions of when you change up some of those percentages?
Absolutely. So, one of the things that happens in the profit bank account, and I always separate profit bank account from the financial statement profit because we're looking at the physical cash here, right? The
Mhm.
physical cash has been collected. Is every quarter we have a celebration. We have a quarterly distribution. So just like if you invested in the stock market and your stocks would pay you a dividend every quarter, what's going to happen is your business is going to pay you a dividend every quarter. Now, half of this profit bank account is going to go into a vault account. So you're going to create another bank account that's far away from your current bank. I like to say one of those old banks, like, I'm in Texas, so like the Bank of Texas, something that
When you
isn't
have to
online.
drive to get any of your
Exactly.
money out. Exactly.
All the way to the south side. Exactly. Looks like Andy Griffin show type of town. And and what I'm gonna do is I'm gonna take half of my profit and I'm gonna put that into my vault account. And the reason why is that's my retained earnings. So instead of my retained earnings being this accounting number that you're like, okay, I got retained earnings. Where is it? Is it
Right.
a computer? Where's my retained earnings on the
Yeah.
other side of the
It's a
balance sheet,
number at the
right?
bottom of the P&L or at the bottom of the balance sheet.
Exactly. You're gonna actually be able to see the cash that matches the retained earnings. And this is
Mhm.
gonna be in your vault account. And we want you to build this until you've got about 3 to 6 months of operating expenses in this vault account because
Mhm.
you want to be able to weather the storms.
Yep.
And so creating that vault is very important for that. The other half of that is if you have debt, and it's not unusual for a business that was not operating with profit first to have debt because I think there was a push in the business community to get access to capital. What
There's
you're going to
healthy
do
debt.
is
There's healthy debt too. So it's, reinvesting into the company.
what we're going to do is we're going to do a debt snowball. And so what we're going to do is we're going to tackle the smallest debt first. And once that's eradicated, we're going to tackle the next smallest debt next, right?
Mhm.
And so what we're gonna do is we're just gonna continue to pay off that debt with that other half of that profit. So instead of spending all the profit or dispersing all the profit, right? We've got half of it going to retain earnings to a vault account, half of it's going to the debt snowball. Now, if you're in a fortunate position to be debt free, congratulations. For you, you're going to take a cash distribution or cash dividend every single quarter. And that's where you can decide, what do I want to do with this money? Do I want to start a new business with this money, invest it in the stock market, right? What do I want to do with this money, or invest it in another area of your business a new initiative that you might want to grow? This is your money to decide where you want to invest in that, or upgrade your lifestyle if you want to, right?
Mhm.
But this is your choice where you can spend that money at.
Question for you. So, companies that are fast growing, there's usually that reinvestment in the company. So maybe it's new technology. I know our company just, is developing some software. So lots of additional expenses that are going to be temporary, a year or two of this growth period, right? So which buckets, or how do you strategize against when you want to spend a significant amount, not just hiring the next person, but something like this, like tech development, or new vehicles for your delivery, or whatever it is, or a new location that's a hefty expense? Where does that come from in the buckets?
So first of all, it starts with your planning, right? Your planning, and of course, planning is not a one time thing; it's an annual thing, maybe even a quarterly thing for some of you. And one of the things to be cognizant about, what I've seen in entrepreneurs is, again, you're fighting against Parkinson's law. Your business always has a need, right? I always need a new computer. I'm telling you, every year, Microsoft issues a new Surface Pro, and I'm like, I need to have that Surface Pro, right? Um, or there's a new conference I want to go to, or something that has to happen.
Yeah.
And so, I think that there's always that fight that we have with ourselves within Parkinson's law, but there are some legitimate expenses that will increase revenue, right? And part of growth, right, and especially accelerated growth, is knowing what are those initiatives. Is it advertising? Is it bringing on a new salesperson that it may take them 3 months to ramp up, right? For that. And so part of that is going, okay, where am I going to get a 4x on my expenses or 10x on advertising, right? And knowing where to focus that on, but also realizing that, okay, I need seed money for this project that I'm about to invest in. And that seed money, once you've got your retained earnings, your vault account to a certain point, you can now take that money there and invest it as seed money and determine what is it that I want to invest in, because there's a potential to get a 4x or 10x on that particular expense. But I
Mhm.
think it's also important too to measure, especially if you're in marketing initiatives or going into a new initiative, measure the success. Are we meeting our milestones? Should we continue to do this? Because one of the things we don't want to do is get into an initiative that is going to continue to bleed a year later.
Yes. I mean, the ROI is the calculation before any decisions of magnitude like that. What is it 3x, 4x, 10x? Because if you don't know that answer, you shouldn't be pulling the trigger.
Exactly. Exactly.
Okay. So, I'm not sure that we answered. I think we got a little off track, or maybe I didn't hear it. But when do you adjust those percentages for, like, even just say the salary?
So I would say, most of the time when I'm working with someone that's implementing profit first, it's not unusual that they're starting with a 1% profit goal.
Mhm.
And
Yep.
they're just building from there. Some of the recommended percentages, I have a site that the audience is welcome to go to. It's called profitmap.co. And we actually list the recommended percentages that go to profit, owner's pay, tax, operating expense that a healthy company sees. And these percentages change over time. For example, when a company is really small and they're $250,000 in revenue, most of the revenue is going towards the owner's benefit, right? It's going towards I think its owner's pays like 50%, 15% going to tax, and then just like 5% profit, and the rest is going to OpEx. And the reason why is when he's under 250, it's a one-man show. This man is doing everything. He's answering the phone, he's fulfilling the orders, he's cleaning the bathrooms, he's doing everything.
I remember those
And
days.
and by the time he's $10 million in revenue, right, he's now relying on the power of his team. Now, he still has a salary, but it's very small in comparison to the revenue as a whole. Unlike
Mhm.
when he first started, when he was the only employee, it was like half of the revenue. But now most of the operating expenses are going towards the team. It's supporting the team because practically they can run the company without him. He doesn't have to be there every single day. And so
Mhm.
you're going to see those percentages shift as that company grows from that standpoint. But in terms of implementing profit first, I would say start small. Start with a 1% profit goal. And if you're already at 1% profit, good for you. Then just raise it to 2% and then just continue to increase it from there.
Mhm.
And some of you may be locked into a project. You may be locked into a lease, or you might have debt that's out there. And so, you're just like it took you years to build those habits, it may take you a year to turn things around. It's not going to be an overnight change, but it's about creating a plan in order to move out of those situations and give yourself more freedom with your
Mhm.
finances.
And I think it's the awareness, right? So if you have this profit first mentality, it's not we're setting it in January like a 12-month forecast and leaving it. We're looking at that. It's part of our everyday conversations with our team, or as we're doing quarterly planning, like, okay, well, we just had a great 6 months that we weren't planning on. Like, let's look at our percentages, right? Um, yeah, that makes sense. I follow profit first in my personal life too. My bank, I have several bank accounts. So I have a text account. We have our going out account, which is separate. It's our going out and our vacation account. We have our regular. We each have our individual expense accounts. We have our household account. So yeah, that mentality is ingrained in me.
I love it. I love it.
Yeah. It probably comes back to I mentioned too that I've done it with my kids when they were little. Now they're in their 20s. But we had a college account, even whether we knew they were going to go to college or not. We had a church account, we had a fun account, and then sometimes they'd have like if they were saving for a bicycle or whatever it was that they were saving for, it taught them how to ration out their money. And you don't get to put all your money in the bike account. It has to go into the college account, the church account, the savings account, and then what's left over can go in the bike account.
I love it. And with technology now, you can actually automate a lot of those transfers, right? There are banks out there that will
Yep.
perform those transfers for you automatic once you set it up. And so it's like literally set it up and forget it.
Yes, that is how my tax account works. It just happens. Yep. Money is just transferred. And then when I have to pay quarterly taxes, I'm glad it's there. I guess that's the other piece of that's the positive piece, right? We're not as an entrepreneur, you're not looking for, like you said, some people are as tax time, if your business is very profitable, it's quarterly. So you're needing to make those payments and you don't want to pull just from that month's cash to pay your quarterly taxes. As it shows up, it seems like every, quarters go by really fast.
Oh yeah. And they can be for some of you guys, good six-figure bills, right? Depending
Mhm.
on how successful your year has been.
Yes, exactly.
And that's another thing too, is you don't want to be hurting yourself just to hurt the IRS. Is
Yes.
a very important conversation. A lot of times I see entrepreneurs and they're so caught up with, I don't want to pay taxes, that they get into a rut of how do I spend down my profit by the end of the year? So they buy filing cabinets, they buy heavy duty Ford 250s, 350s, and their doctor's office. And they're like, why do you need a Ford 350, right? For this doctor's office. And so, yes, we're hurting Uncle Sam. He's not getting our money, but we're also not setting ourselves up for the things that we want. And so, part of it is going, how do I get what I want? How do I build my net worth while not necessarily paying Uncle Sam? And for some of us, depending on what your business is structured like, right? If you're a more like a solo business, right? It's more you're doing high-end consulting. Maybe it's setting up a Keogh plan or solo 401k plan where you're putting away, about $60,000 a year into your retirement account. So now you're building your net worth. You're still getting a tax deduction,
Mm-hmm.
but you're not paying the tax expense, right? Or for my larger businesses out there that have large team, maybe what I do instead of having a safe harbor 401k is, we reward longevity. You've got to be with me for 6 years to fully vest into our 401k plan. And if you leave me for the shining light of a competitor after year two, I'm happy for you, sad for me, but happy for you. But you don't get to take my 401k contributions with you. Those go back into the plan. And if I'm the last one standing, I just built my net worth right there, right? Because you left. Yes, I got a tax deduction, but at the same time, if you didn't use it, then it stays in the plan. And it ultimately can go to me potentially at the end. So, again, I'm creating a win-win situation. If you stay with me for 6 years, I win because you get better at your job, you get more efficient. We serve
Mm-hmm.
more customers that are happier, right? And it creates a win-win situation. Again, it's lining up the things that are important to me that will allow me to take a tax deduction.
And still build your own wealth in those scenarios.
Exactly.
Mm-hmm.
Exactly.
Yes, I think we talked offline before we were recording today about that same advice from a CPA that I changed right after this advice was the same thing. Told me to go buy I don't even remember what it was, a huge SUV, Escalade, I think it was, which is a bigger vehicle than I drive. It was ridiculously expensive for something I didn't want, and it was all just to save me in taxes because of the depreciation rate. I did not follow that advice. I bought the car that I wanted because it was time to buy a car, and I purposely did it on the 31st of of December to get the tax benefits. But yeah, to go buy something that I didn't need and that would have just not made me happy was really bad advice just for an extra depreciation write off. So talk to your CPAs, but also be mindful of what is actually strategic and what you really want.
Exactly.
Yes. Love it. So we have shared how to get set up. We have shared how to adjust throughout the year and as you're growing your business. We've talked about the tax strategies to kind of have a win-win with both. What are your final words, or is there anything else that we missed to have our listeners go out and be more intentional with their profits going forward?
You know, It's interesting that you asked that, Tina, because a lot of times the question I get from entrepreneurs is they hear about Profit First, they get so excited about starting Profit First. And then they'll get stuck in these questions like, where do I open my bank accounts? Or how do I reduce my bank fees? And these are great questions. But what happens is they get stuck in this analysis paralysis, literally, like question over and over and over again, like a zillion things. But the reality is you just have to get started. And, it's kind of like what Mark Twain says, if you have to eat a frog, it's best to eat it first thing in the morning. If you have to eat two frogs, eat the biggest one first. Sometimes in life, you just have to eat the frog, right? If you continue to do the same thing, you're going to get the same results. And so, if you guys are loving this idea of profit first, don't wait until January 2025 to get started. Start today. Start from 1% allocation of your revenue into a profit bank account and just build it from there.
Mm-hmm. And if they want more details on how to do it from more than what we've shared today, you have a wonderful book to share.
Yes. So I'm an author of a book that is part of the Profit First family. It's called Profit First for Minority Business Enterprises. And even if you're not a minority, it is an amazing book. I have had people call me and are like, I love your book. I relate so much. And I look at them like, you are not a minority. But but
Book is for anyone.
it is a great book. I mean, we talk tax strategy, we talk about government contracting, a lot of things that women-owned businesses face. And we also talk profit first. And so it's a great book. And another thing about the book is $1 of every book goes to a 501(c)(3) called Hope Worldwide. And what we've been doing since the book has launched is we've been sending girls to school in Zimbabwe. So every year since the book is launched, we have filled up an entire classroom of young ladies that are going to school. And this is a passion project for me because, a lot of times what happens is, you know, the government pays for college, but it doesn't pay for elementary school. And so a lot of times girls are the last on the priority to be sent to school and be able to develop their education. And so by us allowing girls to go to school, we change the trajectory of these girls' lives. So instead of looking forward to getting married one day or worried about how pretty am I that I get randomly selected for this thing called marriage, I'm now able to make my own path in this world. So definitely if you do purchase a copy of the book, you're sending girls to school.
I love that. Absolutely love that. And then I imagine you're sharing all of this great advice on your podcast as well, the Profit Talk.
Yes. So I have a podcast and we talk everything profit on the Profit Talk podcast. So definitely tune in sometimes with Suzanne Mariga on the Profit Talk.
Awesome. I will put all of that, the book and the podcast and your other socials in the show notes, and as well as the information for the book.
Thank you.
That's awesome. Thank you for today. Again, I think it's so important, especially this time of year, to be thinking about profits and making that the first priority so that you can serve your team and your community and the world even better.
Thank you, Tina, for having me.
I hope you enjoyed today's episode. Please be sure to hit subscribe on your favorite podcast platform so you never miss an episode. The Women Choosing Growth Show is not just another podcast. It's a tribe of women helping each other grow. So please, share this podcast with all the women entrepreneurs that you would love to see succeed. If you'd like to know more about customized business advising through Cultivate Advisors, download business tools, or sign up for upcoming events, visit www.womenchoosinggrowth.com. Once again, that's www.womenchoosinggrowth.com. Remember, we are in this together. See you on the next one.